Hello everyone and welcome back to the channel. Today we're breaking down the biggest headlines that shaped the US stock market in June 2025. From Middle East tensions to tariff wars, labor market shocks, and surprising GDP numbers, this month had it all. Let's dive in. Let's start with the biggest global story. In mid-June, Israel launched airstrikes on Iranian nuclear sites. That sent oil prices soaring, up between 7 and 11% in just a few hours. Markets panicked. US equity futures dropped sharply, gold prices surged, and investors rushed into safe haven currencies like the Swiss franc. But then, only days later, a ceasefire was announced. The markets calmed almost instantly. The Nasdaq and S&P rebounded strongly. Oil prices fell back, and the fear premium faded. This sharp dip and quick recovery became one of the defining market moments of the month. President Trump introduced what he called Liberation Day tariffs. These were sweeping new import taxes ranging from 10 to 25% on goods from the EU, Canada, Mexico, India, and the UK. Investors were worried, for good reason. Rising input costs, inflation risks, and potential retaliation all weighed on market sentiment. Sectors like autos, consumer goods, and industrials felt the pressure first. Wall Street began bracing for weaker earnings guidance in Q3. And then came the GDP report, and it looked like great news at first. The US economy grew by 3% in the second quarter, much higher than expected. But when analysts looked closer, they noticed something odd. Almost all of the growth came from a decline in imports, not from booming consumer demand or business investment. In fact, real domestic growth was likely closer to 1%. So while the headline looked strong, the underlying momentum, not so much. Then came one of the biggest surprises of the month, the job numbers. In early July, the Bureau of Labor Statistics revised May and June's employment figures, and it wasn't pretty. May's job growth was cut from 144,000 to just 19,000. June was slashed from 147,000 to only 14,000 new jobs. In total, that's over 250,000 jobs erased. Unemployment rose to 4.2%. These revisions shook confidence. Suddenly, the idea of a strong labor market didn't look so solid. Meanwhile, all eyes were on the Fed. In their June meeting, the Federal Reserve decided to keep interest rates unchanged, holding steady at 4.25 to 4.50%. Fed Chair Jerome Powell emphasized data dependency. Translation: don't count on a rate cut just yet. Two Fed members actually voted to cut early, showing there's internal debate, but the majority chose to wait and see. That cautious stance limited the market rally, even as economic data sent mixed signals. So how did the market actually perform? Despite all the noise, June finished strong. The Dow Jones rose 4.3%, the S&P 500 gained 5%, and the Nasdaq, it surged 6.6%. For the full second quarter, the Nasdaq jumped 18%, led by big gains in tech, semiconductors, and AI-related stocks. Meanwhile, defensive sectors like healthcare and consumer staples lagged behind. Investors clearly preferred risk assets. So, can this rally continue? Bank of America says yes, cautiously. They believe fears of stagflation are fading. Why? Because of strong investment in AI, infrastructure, and targeted government stimulus. But the road ahead isn't smooth. Everything still depends on future labor data, inflation trends, and how the Fed reacts. Markets are pricing in 1 or 2 rate cuts before year-end, but that could change fast if inflation returns or jobs data worsens. Investors need to stay alert and flexible. June brought a powerful mix of fear and optimism. Oil spikes from the Israel-Iran conflict, trade war drama with new tariffs, confusing GDP signals, a labor market surprise, and a Fed that's not ready to move just yet. Yet despite all that, stocks rose, especially tech. What does that tell us? Investors are betting on innovation, stimulus, and policy flexibility, even in uncertain times. Disclaimer: this video is for informational and educational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions, and never base a financial decision solely on the content of this video. Thanks for watching, and if you found value in today's video, give it a thumbs up and consider subscribing for more smart, long-term investing ideas. Stay patient, stay consistent, and keep building your path to financial freedom. Until next time, take care and happy investing.